And Amit Jeswani is also joining us at this point of time to give his views on technicals when it comes to this market. Hi Amit, welcome to ET Now. Looking at the way market is bouncing, can we have one stock strategy from you which you feel is a buy or sell if you wish at this point of time from positional perspective, positional in the sense from a week or 15 days perspective?
Hi Siddharth. I do not actually follow the very short-term trading ideas at all. I'm more on the long-term side. But overall, we're looking at, so our one eye is on the long-term and one eye is on the short-term. On the long-term side, it took 70 years for India to reach $2.5 trillion. It's going to take 7-8 years for us to reach $5 trillion. That means more money will be made in the next 8 years than that was created in the last 70 years. So it's about what trends you want to catch. We play long-term trends. So we normally chase growth, and wherever we find consistent growth for a durable period of time, that's where we put in our money. So right now we're long infrastructure and financials. Those are our top bets right now.
So let's talk about what you like to talk about, which is the longer term trend in the markets. And coming out of this earnings season, do you think that FY19 will offer the kind of earnings cushion that the markets would want to take them higher from here?
See, there's always a trend. So between 1992 and 2003, the markets went nowhere, but you had your IT stocks, your media stocks creating a lot of wealth for a lot of investors. Those stocks were growing at 100% that time. So market chases growth. There'll be sector trends, but overall, if you look at the index per se, the markets will not give you anything. So between 2009 and 2014, the markets never went anywhere. The growth of Nifty earnings was 6%, but you had your pharma companies that were growing at 35-40%. All of them, the whole pack should grow at 35-40%. You had your consumer companies like Kajaria, Lao Pala, Page Industries. Those kind of companies were growing at 35-40%, and those guys went up 10, 20, 30 times. So see, there's always a trend in the market, but overall, as we've been saying for the last 5-6 months, the overall market, you will not make like a lot of money. There'll be sector trends, and then you just have to catch those trends.
So why don't you give me a list of 1, 2, maybe 3 companies where forget what happens to the stock today, tomorrow, this week, next week. I mean, if global markets go down, that stock could fall 15%. But which are these companies where you're confident of a 25 to 30% earnings growth?
Nikunj, actually speaking about company specific is not easy. So, but I'll tell you, like companies like Edelweiss is something which we hold in our portfolio. It's the second largest weight in our portfolio. The company is young, it's growing, and so we own it for some time now. It's a very high quality management. Most of their businesses are on inflection points. So it's a clear 35-40% growth story for the next few years, I would say. And these are the stocks. So a high quality management. So they have 2 businesses. One business, which is the capital market business, which generates 200% ROE, and they have the lending business. So the 200% ROE business is the returns that which comes from the 200% ROE business is then put in the lending business, which then generates between 18 to 20%. So there is longevity of growth, and India needs a Goldman Sachs. The profits of Edelweiss are just 1,000 crores. That's just 150 million. This profit will go up multi times. So that's where we've been. You can look at stocks like on the lending side, you've got consumer lending stocks, the stocks which are growing at 30-40%. They are just 1% of India's credit market. If you look, what I'm speaking about. So that can easily be 2%, 3%. See, these are high quality stocks. They're not cheap, but then you'll have to take a leap of faith. The stocks which are cheap, look at what markets are telling you. Wherever there are corporate governance problems like Vakrangi, PC Jeweler, Quality Limited, today Manpasand. So markets will not spare you if you go wrong on management quality. They will probably spare you if you're like wrong by 1-2 quarters of slow growth. You'll fall down 10%, but that's okay. But you don't want to go wrong on the corporate governance side. So that's one risk, which is a big risk.
No, I'm fully with you. I mean, corporate governance, only in hindsight we can figure out, which companies have a great corporate governance or not. So my follow-up question on Edelweiss would be that you mentioned that you like the lending business and the capital market business. They also have insurance business, which is a loss-making business. And the challenge with the capital market business is that we know that the brokerage rates are coming down. I mean, the spreads are not even 10 paisa now, and it's a business which is getting very, very competitive. If you're a merchant banker, corporates are slicing your fee structure as well. So whereas their NCLT business is good, their lending business is great, on the capital market front and the insurance front, I I mean, I think that the competition will only intensify.
So on the insurance business, they are losing money. The insurance business normally has a 7-8 year gestation period. So they lose about 100 crores every year there. That's no big deal. On the brokerage business, they have only 9% of their total revenues come from the brokerage business. So that's not like it's important to give high ROEs, but it's like 70% of the profits come from the lending business. So that's like the more important. So capital market is a very small niche business. They are not retail focused, they're mostly institutional focused, and they have an edge there. So they have a large market, like 2.5-3% market share, which is good, like good market share. And yes, so that those kind of businesses, see, the whole thing is that they have wealth management example. So the wealth management business, they have grown, like they started in 2011 and they have grown from 0 to about 1 lakh crore today. And even on the lending side, they're not lending to only housing. So they are in housing, SME, corporate lending. So if you look at the companies, what the screen is saying, multi-line NBFCs are still a good business. Those monoline NBFCs are like housing finance companies. That's where some problems are happening because the spreads are too low there. But companies like Edelweiss who have very large spread of like 7-8%, they will not face a lot of problems even if the bond yields go up higher, like 50 basis points, 60 basis points more.
What's your call on IT and pharma right now?
Pharma, everyone is buying on the way down. The game was to buy it on the way up, you know. So pharma was the leader of the previous bull market. So normally it takes 6-7 years for the leader of the previous bull market to. So this is a history which has been repeated in the US market and every cycle. So you never buy the leader of the previous bull market. So even though the next pharma bull market comes, the leader of the next pharma bull market will not be your Sun Pharma and your Lupin. The leaders will be newer stocks like Eris or Loris Labs, or I don't know which stocks, but the leaders will change. So that's the case with every bull market. So in pharma, that's the case. See, IT is just the shift towards safety. For larger trends to happen, there has to be large growth rates. So these IT companies are not bad investments; they're good investments. But like we personally like to chase growth. It fits our investment philosophy. So we are not looking at IT right now. But like the rupee should help them, and now the bottom is definitely made. With IT, it's a global IT FANG rally. So you know, FIs are chasing IT everywhere in the world. So trends are global, but those companies like Alibaba is growing at 40-50%, Facebook grew at 63%. Those are very high growth companies, and that's where the big money will be made. But in Indian IT, it's mediocre, so we are not playing that.
You know, I understand that, but let's look at IT. When I started my career in 2000, there was a TMT bull run, and the leaders of that time were Infosys. TCS was not even born. It was Infosys, Wipro and HCL Tech. And today also, if I look at the leader of the IT bull market, it is TCS, to a large extent HCL Tech. Wipro may be a laggard, but it is still part of the top 4 club. And then you still have you know, HCL Tech there. So the point I'm saying, Amit, is that bull markets come and go, but the stronger players, that they get better and better because the cycle changes, and it's the best guy who always evolves the fastest.
Absolutely, you're absolutely right, Nikunj. But the returns, you won't get a 40-50% compounder again in a Sun Pharma. You never made the kind of returns you made. You never made 30-40% or 25-30% compounding in Infosys. So unless you bought it at 2003, that's when the cycle ended. After that, you've not made such kind of returns. See, in markets, we're not looking for 10-15% returns because mutual funds do that any which ways. We're looking at trends where you can actually make 25% plus returns. So for us, it's extremely important to bet on companies. So everyone's got their different return expectations. So it doesn't meet our return expectation. Like historically, the leaders in L&T never performed well after the 2008 crisis. You know, the leader of this road construction bull market is probably Dilip Buildcon. So, you know, the leaders change. There's no big deal. You know, we chase alpha and we manage risk. So that's all we do. So I personally think that it's going to be very difficult for Sun Pharma to get those multiples again.
Okay. Amit, we leave it at that. Thanks very much for joining us.